So question bank, page 66, problem number 1. Suvarna and Sunanda are partners sharing profits and losses equally. Underline the word equally. Only two partners are there. So 1:1. Their balance sheet on 31/3/2018 was as follows. Look at the asset side. Cash at bank. So bank account we have to prepare. We have debtors, inner column 55,000 less PBD, provision for bad debts. So this is called reserve on asset. So PBD comes on credit side, debtors will come on debit side of the realization account. Then we have stock, furniture, machinery, building, all the four to be debited to realization account. Next we have profit and loss account, asset side. So if profit and loss account appears on asset side, the meaning of that is it is a loss incurred by the business. It has to be debited to partners in their capital account. It won't come to the realization account. Next, liability side, bills payable and creditors to be credited to realization account. Next, Sunanda's loan. See here, Sunanda is a partner. Partner's loan will come to bank account credit side. Then you have reserve fund and capitals. Both will go to combined partners capital account. Then information. On the above date, the firm was dissolved. The following information available. Assets realized as follows: debtors, stock, machinery, building, furniture. 5 assets they have given. So all assets which are there in the business, all have been converted into cash. Next, creditors and bills payable were paid at 5% discount. Underline that. So previous problems paid in full. Here it is 5% discount. Next, dissolution expenses amounted to rupees 4,000. Prepare realization account, partners capital account and bank account. So this is the problem given therein. So 1 or 2 new things, not much considering the previous working part of it. So page 67, problem number 1, realization account. I'm starting with.
So P&L account will come on the partner's capital account debit side.
Opposite, yeah, because it is a loss. It is a loss incurred by the business, not shared by partners. So now, because business is being closed, that loss to be debited to partners capital. Opposite side, you can see reserve fund is a profit. You take it on the credit side by partners, by reserve fund in the partners capital. So like that. So loss will be debited to partners. The profit is credited to partners. So we'll start with assets. First asset realizable one is debtors 55,000. Full 55 to be taken here by PBD, that is reserve on asset, to be taken on the credit side. Some people take 52,000 direct, they leave 3,000. Answer may look same, but the totals are wrong. And not only the totals, the method is wrong because the PBD account is not closed in the ledger of the business. So it has to be closed, necessary. Next, stock and furniture to the debit side. Stock 40,000, furniture 50,000. So 40 and 15. Next, machinery and building 25,000 and 81,000. Machinery and building. 25,000 and 81,000. So we have taken all realizable assets, 5 realizable assets to the debit side, and we'll move on to the liabilities side. 2 outside liabilities are there, bills payable and creditors. We will take that over here by bills payable account, by creditors account. We'll take both 10,000 bills payable, 50,000 creditors, 10 and 50 both we have taken. So Sunanda's loan will not come, reserve fund will not come, capitals will not come. So we are done with the step 1 and step 2. We have completed step 1, transferring assets, step 2, transferring liabilities. Next we'll move on for the assets realized. Here it is cash at bank. So I have taken by bank account. So under which we write which are the assets realized. So assets realized here, debtors, stock, machinery, building and furniture. Same order you can take it up. We'll take first debtors and stock. So it's only information we are taking. Debtors 52,000, stock 39,000. Next, 2 assets which will take, machinery 24, building 75. Machinery 24, buildings 75. One more asset is also there. Next, and furniture 13,000. See, I'm not doing the totals. We can do the totals later, not a hurry at all. Next, creditors and bills payable were paid 5% discount. So payment will be done on the debit side, which comes under to bank account. So first to be paid is bills payable 10,000 value, 5% less, 5% of 10,000 is 500. So paid is 9,500. Next, creditors is to be paid 50,000 book value minus 5%, that comes to 2,500. So amount paid is 47,500. Yeah, 50,000 minus 5%, 47,500. So next is lost adjustment, dissolution expense 4,000. So to be paid, so once we complete the adjustments, then we can go for totaling the assets realized, liabilities paid. We can do that. So first we have to ensure whether we have considered all the adjustments or not. That is most important. Otherwise, you may miss out some of the items or adjustments that will trouble you for balancing part of it. So assets realized is total 2,03,000. Liabilities side, let us total what is the liability paid and expenses paid. So that comes to 61,000. So if you see this, so you have debit more, you have to make a glance. Glancing is very important for you. If you glance, you'll come to know rough, or you can take a pencil and total both the sides, then decide which side is more, then you can write it. So debit is more, So let us see what is the amount there in debit side total.
Sir, 2,77,000.
Okay, 2,77,000. I'll write on the credit side also 2,77,000 minus these items amounts. So it comes to balance amount 11,000. This balance is called realization loss to be shared among the two partners who are there. The two partners name Suvarna, first partner 11,000, equal partnership. Remember, even for Sunanda, equal partners. So 5,500 is the loss to be shared by the partners. Then combined partners capital account. Here you have capitals 60 and 80. So I have taken here by opening balance 60 and 80. Then we have a reserve fund 15,000 on the liabilities side. That 15,000 is divided equally. Okay. So 15,000 in 1:1. So 7,500, 7,500. Next, we have P&L account on the asset side, 12,000. As it was a loss, the loss to be debited. So loss 1:1. So 12,000 is 1:1 is 6,000 each. Next, we have to look at the realization account. Whichever capital accounts are there, we have to take. We have only one here. That is for realization loss. So it is on the buy. So it becomes two realization account, realization loss. So 5,500 is the loss shared by them. That is the one I have taken here. Then gone for balancing the capital accounts. When you balance the capital accounts, credit is more. So balance is cash paid to partners, 56,000 and 76,000. So even your bank account is the same. All transfer entries, as you can see. So first is cash at bank 15,000. I have debited 15,000 over here. Then assets realized 2,03,000 on the debit side. Then liabilities paid 61,000. Liability and expenses on the credit side 61,000. Then cash paid to partners over here, Suvarna and Sunanda. We have paid 56 and 76. I have taken to the credit side as by Suvarna and Sunanda's capital. Then we have Sunanda's loan account left in the liability side of balance sheet, 25,000. That 25,000 I have taken on the credit side. Sunanda's loan paid. So Sunanda's loan account debted to bank account here, so 25,000. So total on both the sides is equal 2,18,000. So that tells us the answer is right.